Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, this video is for Friday. It's Friday. Right off the bat, I want a round of applause for that. It's finally Friday. All right. While we're clapping, this has been the busiest month our site has ever seen, baby. Hundreds and hundreds and hundreds of thousands of hits. Hundreds of thousands. Keep them coming. All right. Traders, we got a red Omni in the euro currency for tomorrow. Or I should say today, I guess at this point. This video is for Friday. Red arrow pointing down in euro currency. Traders, I have shown you, I think in last night's video, I held out a chart and I showed you that we are in this well-defined parallel channel facing down in the euro and that we were sitting right at that line, and I did not expect that line to get penetrated. If it did, very slightly, and back down we would go. Well, the euro messed around there a little bit. It has broken down since, is on its way back down right now, and we got a red Omni in the euro on top of it. So the analysis looks lower. Omni wants to see it go lower. We have a trade set up on a site that wants it to go lower. So I guess currency's going lower tomorrow, right? So make sure you take a look at the euro currency yourselves and see what you think. Traders, I can say this. Europe's interest rate is 2%. Ours is basically 0.25. Europe must lower rates. We have nowhere else to go. No matter how you look at that, it equates to a lower euro versus dollar over the near to intermediate term. No other way to look at that, traders. You guys can stand on your heads and tell me whatever you want. Simple mathematics. If you're lowering rates in one country and not in another, that interest rate affects the currency. The country that's lowering rates, their currency goes lower. The one that's not, their currency either stays the same or goes higher versus that other currency. That is the way it works, traders. There is no other way about it. You keep that in mind when you look at your charts. Never, ever let the fundamentals get involved in what you see on the charts, but you need to know the general direction and where it should be going in order to pull the day trades off the charts, right? The general direction is certainly lower, and with that huge fundamental in the background, I would imagine you'll just keep seeing lower and lower formations showing up on the euro chart. With that in mind, traders, I'd like to show you a euro chart. I also want to show you an S&P chart. We tried to trade the S&P once again on the upside yesterday for Thursday. That got stopped out, but I must say, Omniacs, I warned you in the video, I warned you in my flash updates. You knew I was like, oh no, I don't want to buy this thing. Now, I will say this. A professional never, ever interferes with his trading system. My system said it's going up. We did actually have 8-10 points profit in the trade at one time. We didn't take it away. It went to the downside. But what I'm saying is, if you are a professional trader and you do this for a living, you should know better. You never interfere with the system. Now, I've been trading 27 years, and I'm not going to kid you. Last night, I did my homework. The homework said get long S&P. My 27 years said, what are you, crazy? You got to get short this thing. But that would be interfering with my system. So, hey, if I got to get long because my system says and it gets stopped out, and then finally when it goes down, my system gets short, that is what I'm going to do. Once you interfere with the system, traders, you have skewed the results. You have turned what could have been results of a system into your own results. And then what do you really have? At that point, you really don't know what you have. So never interfere with your system if you have one. Now, traders, a system does not have to be an automated system that just works and spits out orders for you. What a system usually is a series of rules that you have, that you follow, and never veer from those rules. In other words, a system doesn't have to be totally automated black box. A system is a systematic approach. If you have a systematic approach, that in itself is a system. That's how these things work. However, once you interfere with that system, it's no longer a systematic approach, and then it becomes seat-of-the-pants trading, something I do not do, traders. So, my Omni says, Oscar, yesterday you wanted to get short, I wanted to get long, but I think tomorrow I want to get short because Omni's starting to flutter already. But for tonight, We're going to stay neutral S&P and let the markets hit a sweet spot before we decide where we're getting in and which direction. But for the euro, clear defined direction as far as I can see, as far as the Omni can see. And let's go look at the chart so I can show you why. Okay, traders, what we are looking at here is the euro currency daily March bar chart. Each green line represents 1 day's trading in the euro currency. Traders, as you can see, this is clearly a defined channel, no doubt, right? You can see it. It's parallel. It hits top, bottom, top, top again, bottom, top, and fails at that top a day and a half ago. Yesterday broke down nice and hard, came all the way down to here, and already tonight it's here. Traders, that is on its way back down to here, wouldn't you think? Indicators are pointing lower. The formation's pointing lower. The fact that Europe's got to lower rates, it's got to go lower. Whether it happens tomorrow or not, the fact that it's going lower, it is still going lower over time. But the analysis does point to it going lower for a day trade tomorrow. So we are going to look for this to get down here at some point, maybe tomorrow, maybe next week. We are sellers. You can see why. Traders, the nicest thing about this is look at this. And this is what I pointed out in the last video. I said, boom, right here, a perfect spot. The Omni proprietary average comes in right at the top of the parallel. The market hit it and failed right there, traders. That is a giveaway trade, in my opinion. In fact, if you were in from the Omni average, you'd be up 150 points already. But I'm not one of those guys that sells right into something like that and let the market stop, fail, and then I jump on board. Much safer to trade that way, traders. All right, that's euro currency. I want to show you the S&P chart, show you where it is now and what I'm looking at, and the reason why we have to stay neutral for a little while, but we'll find a spot to get in most likely on Friday. Let's look at the S&P chart, traders. Okay, traders, what we are looking at now is the S&P March daily bar. Once again, each green line represents 1 day's trading in the S&P. Traders, we are in this wedge formation. Obviously, you can see that, right? Very easy to see it. It connects to bottoms here, connects to bottoms here, connects to a top, top. Okay, so we have that formation. Inside of that formation are other little formations. You know, we had this channel and we traded that for a while. Then it morphed out of the channel and it turned into this. Well, inside of this whole thing, traders, is an upright head and shoulders. That upright head and shoulders is absolutely going to end up being a sell signal. And we got GDP coming out tomorrow, so we'll see what happens. I was hoping to see the market get up to here first and to hit the Omni proprietary average right there at the top of the trend line, just as it did in euro. But the S&P ran out of steam. It went up and just failed. And more importantly, you have, okay, I showed you that we have this formation, the wedge. There's also an upright head and shoulders in there. There was a parallel channel. And on top of that, we got a mirror image building right here, baby. This chart's got a lot to offer. If you got a good eye, there is a whole menu that you can choose from right there in that formation, traders. If you would like to learn how to spot these and how to figure out how to trade them, you come on down to my site and I'd be more than happy to teach you how to do the analysis in this fashion. For now, traders, we'll stay on the neutral side. I would imagine she's on her way back down, but anything's possible, right? I'll let the market speak to us first before we enter. Do your homework, traders. See if you can't find for yourselves this formation. See if you can't figure out how I'm coming up with an upright head and shoulders. Try to find those for yourselves, traders. That'll really help to get your eye a little sharper when it comes to looking at technical analysis. So, traders, you see those charts? You see what I'm talking about in that euro? I mean, come on, you cannot just ignore that nice channel that we have right there. You can't ignore it. The indicators are pointing lower. And then when you look at the S&P, you can't ignore what you're seeing there either. There's a lot happening inside that little wedge formation there, traders. A good analyst will see that. If you want to be a better analyst, you come on down to www.livewithoscar.com. Jump into chat rooms. Join our classes when we hold them. They are live and interactive. And I am sure your eye will start getting better when you're looking at charts. You'll start picking off formations that you just didn't know how to look for before you met us at the site. That is happening for many of our Omniacs. Many more of them are becoming so mentally in tune on how to handle trades that they can handle winners and losers. They can stay in longer than they used to, and they know when to get out, or at least let their stop get hit without moving it. So for you Omniacs that are coming along in that area, wow, up goes baby, as we say at the site. Good job. All right, traders, I will be there at the site tomorrow running these trades. Make sure you come on down. Give me a call day or night, 702-629-4755. And don't forget, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.